Good evening, students. I welcome you all in our today's session of income tax revisionary classes. And today we will be covering the revision part of salary and income from house property. So you all know these are two starting heads of income chapter, which we have already gone through in our normal classes in detail. But today we will see how to solve a question. In the first class also, I have asked you that please revise the provision before attending these classes, because in these classes, generally, we are dealing how to attempt the question, how to solve a question, the kind of question you may face or you may be encountered in your examination. So it is utmost important that you know the basic provision when I am solving question with you. So it's an interactive session, of course. So when I am solving any provision, the reason behind that solution, that should you understand. And it is only possible if you have already revised that topic before this class. So let me see if there is any query, etc. Good evening, Navneet. Good evening. Okay, so today, before starting today's questions or the question which are related to income from house property and income under the head salary, we need to discuss some important tips. When there is a question regarding income from house property and income under the head salary, you have to be very careful about some important tips what we are just going to discuss in this class. Because due to that default tax regime and of course due to optional tax regime, before starting the question, you have to be very clear that if the question relates to default tax regime, what kind of exemptions we cannot claim or what kind of deduction we cannot claim under income from house property as well as income under the head salary. So in a summarized way, if I can explain that in a shorter and summarized way, so we can say if there is a question related to salary, you have to see whether do I need to solve that question as per default tax regime or as per optional tax regime. So accordingly, we have to make changes in our solution because we all know the basic difference applying default tax regime and applying optional tax regime in case of salary income is first one is standard deduction. So how much standard deduction we can avail under default tax regime and how much standard deduction we can avail under optional tax regime? Who will tell me? Very simple question, of course. Good evening, Dia. Good evening, Ajay. Okay, Navneet is saying 75,000, 50,000. Dia is saying 70,000. Are you sure, Dia, it's 70,000? I don't think so. Ajay is saying 75,000 and 50,000. Yes, it's 75,000 and 50,000. Under default tax regime, you can claim the deduction maximum 75,000. And in case of optional tax regime, we can claim it 50,000. Clear? So when you are solving, please keep this thing in your mind that when I'm going to claim deduction, it should be 75,000 if the option is default tax regime, and it should be 50,000 if that option is or that question I'm going to solve under optional tax regime. There are certain deduction or we can say exemption. Those are not allowed under default tax regime. There are certain exemption not allowed under default tax regime. So there are certain exemptions. And when you are solving a question of salary, you have to be very careful. House rent allowance benefit you cannot claim under default tax regime. Leave travel concession exemption you cannot claim under default tax regime. There are some specific allowance or we can say special allowances also. Out of those special allowances, you cannot claim helper allowance benefit. Helper allowance benefit is available under optional tax regime. It is not available under default tax regime. Second is you can say research allowance or we can say academic allowance also. Again, not available under default tax regime. One more allowance, and that is uniform allowance. Uniform allowance also not available, this exemption not available under default tax regime. A special allowance for MP MLAs, that is daily allowance or constituency allowance, also not allowable under default tax regime. One more important thing, entertainment allowance deduction also not available in case of default tax regime. We are talking about now deduction. So we can claim standard deduction 75,000, but there are two more deduction under salary head. One is entertainment allowance deduction and professional tax deduction. These both deduction is not allowed under default tax regime, which is allowed only under optional tax regime. Can any one of you tell me who can claim entertainment allowance deduction under optional tax regime? Because there was a specific case. Navneet instantly answered. Very good, Navneet Maurya. Government, only government employee can claim the benefit of entertainment allowance deduction. That is also only under optional tax regime. So suppose a question under default tax regime is there, and that is a government employee, and there is entertainment allowance is given. So maybe your mind will say you, okay, it is a government employee, so deduction of entertainment allowance should avail. But remember, this deduction you cannot claim under default tax regime. So these basic things you have to understand when you solve a question under salary head, because the regime will affect your answer in a very, very big impact that would be in your answer if you will mistaken in applying the exemption in that specific regime. One more thing, that is dearness allowance. Please be very careful about dearness allowance. So dearness allowance, you have to check whether it is as per retirement benefits or not, because in multiple cases, dearness allowance only if it is as per retirement benefit, you can consider that for the calculation of HRA, for the calculation of gratuity, etc., etc. So you have to be very careful about the DA information, whether it is as per retirement benefit or not. So these are main things. You have to be very careful when you are solving a question under the ad salary. And standard deduction in case of optional tax regime would be 50,000. In the same way, when we talk about income from house property, so if there is any rental income from a building, then we apply the provision of income from house property. Now, under income from house property also, this regime, like if it is under default tax regime or if it is under optional tax regime, there is a very big impact regarding interest provision. So under default tax regime, if the property is self-occupied, I believe you must have remembered that, or you must have revised that under default tax regime, if the property has been self-occupied, then interest deduction cannot be claimed, whether it's current year interest or whether it is 1/5 of pre-construction period interest. You cannot claim it. Even if it is not self-occupied, then the losses under the head income from house property cannot be set off from any other income if you are following default tax regime. So you cannot claim interest if the property is self-occupied. So technically we can say in case of default tax regime, the self-occupied property's value will be always nil. Always nil. So even if there is any information regarding loan, interest, etc., everything is irrelevant if the property is only self-occupied or vacant for the full year. And if the losses arises in other cases like let out property, etc., in that case also those losses cannot be set off from any other head of income. Inter-head adjustment does not allow. In case of optional tax regime, yes, of course, Mr. Arun Sagar, they cannot be carry forward also. Of course, if the loss cannot be set off, the carry forward also not allowed. So these three things, you have to be very careful when you are solving a question under income from house property. Under optional tax regime, you can claim interest against self-occupied property, whether it's 30,000 or 2 lakh rupees, depending upon the fact of the cases. And if there is any loss under income from house property under optional tax regime, how much we can set off from other heads of income? How much losses we can set off from other head of income? That is 2 lakh rupees. Well done, Arun. 2 lakh rupees losses can be set off from other heads of income, and the balance you can carry forward. So carry forward is allowed in case of optional tax regime. So if there is a question which is related to salary head of income and income from house property, let me tell you, this default tax regime and optional tax regime is having impact in almost in every head of income, and also in deductions case, etc. So when you are solving a question, that's why I always say, read the requirement of question. And when you are reading the requirement of question, what you need to calculate, always underline or write it down in bold in your answer sheet, default tax regime or optional tax regime. So if you are solving a question, always keep in mind, this is default tax regime I am solving, so you will not do this mistake. Okay. Okay, so this is the basic concept what we just going through under the head salary and house property. Now we will move on to the question part. So one by one, we will solve the question. Arun Sagar is saying carry forward can adjust with intra-head only. No, if you are following optional tax regime, then intra-head and inter-head both allowed in case of losses from house property, but inter-head is allowed only maximum up to 2 lakh rupees. Okay. Navneet is asking for let out, no limit of interest. Yes, there is no limit in case of let out of property, whether it is under optional tax regime or under default tax regime. So now question 1 we are going to solve, and the most important part, I always say the most important part before solving a question is to understand the question. To understand what is the requirement of the question, to understand what is the question trying to explain to you. So you have to be very careful when you are reading a question, because if you read it wrongly, then of course the solution would be wrong. Okay, so now the question says, Mr. Sahil, a resident individual, age 40 years, is an assistant manager of so-and-so, getting a salary of 55,000 per month. During the previous year, 25-26, he received the following amounts from his employer. So we have to solve a question, and the information regarding salary has been given, but I need to know the requirement of question first. So compute the income under the head salary. So they are just asking you to calculate the income under the head salary. No GTI, no TI, no tax calculation is required of Mr. Sahil for assessment year if he is paying tax under default tax regime. So this is most important part in today's scenario in case of income tax, that when there is a question, you have to see, do I need to solve it as per default tax regime or do I need to solve it as an optional tax regime? So when you see that we need to solve this question under default tax regime, so in the solution, you have to write it down in bold letter, default tax regime. So you will not forget this information. So if you are doing something wrong, maybe you will see it and you will understand, okay, this is default tax regime and I am doing this mistake. So this should be always kept in your mind. Okay. So now we start the question. I already told you that whenever you are solving a question under income tax, you have to write down that heading, that computation of salary income for Mr. So-and-so for assessment year 26-27. So you have to follow that format in every question. So we are solving it directly. And the basic salary first point, 55,000 per month. So the yearly salary would be 6,60,000. Dearness allowance. This is a very important thing, dearness allowance. And we have to say 10% of basic pay, which form part of salary for retirement benefits. So my dearness allowance is 66,000. And when we have gone through with this chapter and the time of the solution, I always told you that if that is as per terms of employment, write it down this symbol T. That means as per terms of employment. So you will never miss this thing that when do I need to include the DA when solving the HRA, when solving the gratuity, leave encashment, provident fund provision, etc. And bonus is 60,000. Fixed medical allowance of 50,000 for meeting medical expenditure. So what should be the treatment of this point? Do I need to exempt it? Do I need to tax it, or it is partially exempted or partially taxable? Is there any provision for medical allowance exemption? No, there is no provision which says that medical allowance should have some exemption. It is going to be fully taxable. He was also reimbursed the medical bill of his mother depending on him amounting to rupees 6,500. So what is the provision for this medical bill? Do I need to tax it, or is it fully exempted, or partially exempted, taxable as per some provision? So what is the provision regarding reimbursement of the medical bill of the mother when she is dependent on assessee? Do we need to tax it or exemption? What do you say, students? What do I need to do? Nagaraja is saying exemption. Dia is saying not to consider. Dia, there is nothing like not to consider. Kindly give your answer like taxable or non-taxable. Yeah, taxable or exemption. Not to consider, I don't understand. What should I write it down? Not to consider is not a language of answering. Okay. So, okay, Dia is saying non-taxable. Arun Sagar is saying taxable. Navneet is saying taxable. Aditya is saying exempted. And the correct answer is reimbursement of medical bills is full taxable. There is no exemption regarding it. Where we have discussed the exemption regarding the reimbursement of medical bill in our provision. I am believing that you have already revised the salary topic yesterday before this class. So where is this provision we have discussed ever that medical reimbursement of bills are exempted? Nowhere. If the hospital is maintained by employer, if somebody is going outside India, then if RBI approved, those were exemption case. But in case of normal reimbursement of medical bill, there was no exemption is there. So, of course, this is going to be full taxable. If it is not mentioned that hospital is maintained by the employer, and you can see where he is working, Fox Limited. There is no even hospital name is there. So you cannot take that assumption. That assumption would be negative assumption. That would be a wrong assumption. Okay. Now the important points. Just a second. Okay. YouTube का वीडियो नहीं चल रहा था तो I was seeing everything is fine. Okay. So technically you can see now that the fifth point is there and it says Miss Diyajan is saying, sir, it will a perquisite. Yes, it is a perquisite. Obligation of employee met by employer. That is a perquisite always. Now, Mr. Sahil was provided a laptop both for official and personal use. Laptop was acquired by the company on so and so for rupees 35,000. So, what is the treatment of a laptop? Laptop is a movable asset which has been provided by the employer to employee for official as well as personal use. So, we have discussed that provision that if there is a laptop has been provided, laptop or computer, it has been given to the employee for the purpose of use, then the taxable value would always be nil. No taxable value. Clear? Now, a domestic servant on a monthly salary of 8,000, which was reimbursed by his employer. So now domestic servant also there. The salary has been paid by employer. So what is the treatment? Fully taxable. Correct, Keshav. Very well done. So this is salary reimbursement. Obligation of employee met by employer. If paid by employer, that is going to be taxable perquisite. So the yearly taxable value would be 96,000. Yes, of course, if it is a specified employee, and it is a specified employee, we have already seen that. Now, point number 6. This point also we have discussed, and this kind of point in multiple questions are there, and this is very important point for the purpose of examination also. You can see this point is consisting 5 lines almost, but the solution is very simple if you know how to solve it. So Fox Limited allotted 700 equity shares in the month of October at the rate of 170 per share against the fair market value of 280 rupees per share on the date of exercise of the option by Mr. Sahil. The FMV was computed accordance with the method prescribed under the Act. So if the market value of those shares was 280 rupees, and if 280 rupees market value share has been received by you at the rate of 170, that means you have the gain of 110 rupees per share. So this is going to be taxed, and there was 700 shares. That share's value is going to be a taxable perquisite. So share perquisite value is 77,000. Clear? Now, professional tax of rupees 2,200, out of which 1,400 was paid by the employer. So can you tell me how, from this information, what amount needs to be taxed over here as a perquisite, whether it's 2,200, 1,400, or any other value? Professional tax perquisite. How much do I need to tax over here? So Nagaraj is saying 2,200, Mahalakshmi is saying 1,400, Arun Sagar is saying 1,400, and the correct answer is, which is paid by employer. That would be 1,400. So out of this 2,200, technically 1,400 paid by employer and 800 paid by me. So if something is paid by employee, that cannot be perquisite. So this is the value which is going to be taxed. Now the total value will be 1016900. Now we have to give the standard deduction. Navneet is saying 2,200 deducted OTR. Yes, if it would have been the question from optional tax regime, then we could deduct 2,200. But because it's a default tax regime question, so only 75,000 deduction would be there, and the balance taxable income under the hat salary would be 6,941,900. So this is your salary income. I hope it's clear. Simple question. And these are kind of question we are solving. These are the kind of question which would be or maybe going to be asked in the examination. So if you know the provision, you can solve the question. The problem will arise in 2 cases. Either you do not understand the question, or you do not remember the provision, and maybe you not understand how to apply the provision. Arun Sagar is saying rebate 87A apply. We do need not to calculate tax in this case, Arun. Okay, they just asked you to calculate the salary. That's it. Now question number 2. Mr. Kushal is a resident, but not ordinary resident in India. So he is resident and not ordinary resident. So please make a habit that whenever you are reading a question, you can underline the important information, or you could write it down the important things beside as you like, but you have to understand to decode the question. That is very important. He furnished the following information regarding his income expenditure pertaining to his house property. So we know this is a question relating to income from house property. For the purpose of solving a question under income from house property, when we are going through with the provision in the normal class, under that income from house property. So I've told you there could be 7 kind of different situation. Either property could be self-occupied, either property could be vacant for full year, either it could be let out for the full year, either it could be deemed let out, either it could be let out but unrealized rent is there, either it could be let out or vacant, or let out and self-occupied. So there were multiple cases we have solved, almost 7 cases which we have discussed as per case number A, B, C, D, E, F, and G. And you have to identify when the question is given, you have to identify which case is applicable. If you are able to identify that in that specific problem which has been given in the question, which case is applicable, so I can assure you 50% of your question is solved. So if you once correctly find it out which case it is in the question, then you know how to solve it. And house property, in my opinion, is one of the easiest numerical topic. If there's a question of 5 or 6 marks, you are going to get full marks in under income from house property. Okay. So now the question says he owns 2 houses, one in New York and the other in Ahmedabad. Very good. But again, the requirement of question, we have to go through first. Compute the income chargeable under the head income from house property. Of course, we will find it out for Mr. Kushal if he has opted out of the default tax regime. If he has opted out. So because he's opted out, so that now self-occupied property can claim the interest advantage. So this is the major change when there's a property is under optional tax regime. So now the question needs to be solved under optional tax regime. Information regarding 2 houses has been given in the question, one in New York and the other in Ahmedabad. The house in New York is let out there at a rent of $5,000 per month. The entire rent is received in India. And now because rent is received in India and assessee was resident and not ordinary resident. So if income is received in India, then it is going to be taxed. As per normal provision of income from house property, he paid property tax. These are municipal taxes, property tax of this one and sewerage taxes of 750. And you can take the value is $1 equal to 81 Indian rupees. The house in Ahmedabad is self-occupied. He had taken a loan of rupees so and so to construct the house on 1st September 20. The construction was completed on 31st May and he occupied the house from 1st June of 2022. Entire loan is outstanding. Property tax of second house is 2,800. So first of all, we are solving New York house property value. So because municipal value, fair rent, standard rent is not given, so directly we can calculate actual rent received. That would be our GAV automatically. So our GAV would be our actual rent received, and that would be 5,000 into 12 into 81. So that would be 4860,000. That would be my GAV. Now from GAV we have to reduce the municipal taxes paid. So municipal taxes paid is 1250 plus 750. That means 2,000. So the value would be 1,62,000. So my value would be now 4698000. Now less karenge 30% standard deduction. That would be 1409400. So total would be 3288600. That would be house property income of New York. But now we need to solve the house in Ahmedabad. And now because it is self-occupied. Now because this property is self-occupied, so technically your annual value will be automatically nil. Municipal tax is irrelevant. Only one thing you can claim as deduction because we are under optional tax regime. If it would have been a question of default tax regime, so there would be nil under self-occupied. But because it is optional tax regime, so we have to calculate the interest, and there could be two interest. One is current year interest, and the second would be 1/5 of pre-construction period interest. So I will solve this part on separate sheet due to the space issue over there. So in case of, let me see the question. So the house in Ahmedabad is self-occupied. Annual value, we have seen, it would be nil. The interest we have to calculate, and that would be current year interest. Now, for the purpose of current year interest, we have to see how much loan is outstanding in our current year. Current year means our previous year. So in 25-26 previous year, how much loan amount has been outstanding? So the question says that the assessee has taken 30 lakh rupees loan at the rate of 10%. And the entire loan is outstanding. Nothing has been repaid yet. So the loan has been taken on 1st September 2020. The construction completed. Construction completed date has been given in the question, 31st May 22. And the assessee occupied the house, occupied the property on 1st June 2022. So loan date has been given in question, construction date has been given, and the property occupied by the assessee date has been given in the question. So the question says the entire loan is outstanding. So student, if entire loan has been outstanding, what would be the current year interest? The full interest on the principal amount, the full current year interest, that would be 3 lakh rupees. Clear? But we have to calculate the pre-construction period interest also, 1/5 of pre-construction period interest. Now, for the purpose of pre-construction period interest calculation, so when we were going through with the normal classes of income from house property, we have solved this kind of provision. And I have told you, you have to calculate very carefully the pre-construction period. So if you would be able to find out the pre-construction period correctly, you would be able to find out the correct pre-construction period interest also. The pre-construction period will be start always. From which date it will start? What I have told you. From which date we will start our pre-construction period, students? Which is the date from where we start our pre-construction period? Exactly, Navneet, correct, Nagaraja also. The date we have taken the loan. The date of loan taken would be the starting point, 1st September 2020. And the end date would be date of repayment of loan. And because in the question it says the entire loan is outstanding, so this date is not there. And the second date is 31st March preceding completion of house. So tell me, when the completion has been done, the completion has been done on 31st May 2022. So when there would be 31st March before this date? If the construction has been completed 31st May 22, I need over here the 31st March date before the completion date. So if 31st May 22 is the date, the March before this would be the 31st March 2022. So this date or this date, whichever is earlier. So this date is not given. So this would be my earlier date. Kuldeep is saying 31st March 21. कैसे कुलदीप? अगर कंस्ट्रक्शन कंप्लीट हुआ है 31 मई 2022, 31 मई 2022, तो आपको ये बताना है उस वाली डेट से पहले मार्च कब आई थी। तो ऑफकोर्स मई से पहले वाली मार्च 31 मार्च 22 को ही आ गई होगी। 21 इज अर्लियर देन दैट। ओके, चलो, तो स्टार्टिंग डेट वी गॉट एंड एंड डेट वी गॉट। So now we have to calculate how many months are there. So how many months are there from 1st September 2020? If I'll ask you to calculate month up to 31st March 2022, so how many months are there from 1st September till this date? Easy, of course, Navneet, correct. 19 months are there. So my pre-construction period is 19 months. And now I can easily calculate my interest. Loan amount, which has been given in question, 30 lakh, rate of interest, and you need to calculate the interest of 19 months. So we can multiply it by 19 divided by 12. That would be my pre-construction period interest, and it would be 4,75,000. And we can claim only 1/5 every year from the year in which house has been completed. So 1/5 of 4,75,000 would be 95,000. So total interest is 3,95,000, but we can only claim maximum 2 lakh rupees. Navneet, it's saying whole amount is outstanding. The principal amount is outstanding. This 30 lakh rupees is outstanding. That's why we have calculate on 30 lakh rupees. So this 2 lakh rupees we can claim as reduction under income from house property. So the loss under this would be 2 lakh rupees. And the other property profit was 3288600. So the net income from house property would be 3088600. That would be my answer. We do not need to go through and check the other deduction, section 80C, 80E, 80EE, no requirement. Because the question only asks you to calculate income under that income from house property. Navneet is saying, sir, we cannot adjust 95,000 because the maximum loss which is allowed is only 2 lakh rupees, only 2 lakh. So it's 3,95,000, but we can only take the loss up to rupees 2 lakh. So only this 2 lakh rupees can be adjusted from the New York income. We have adjusted it. You can see that. Only 2 lakh can be adjusted. The remaining cannot be adjusted under income from house property. I hope you understand now. Good. Moving on to next. So you can see you just need to read the question, just follow the provision and applying it without being panic or nervous. If you apply the provision, that would be the best case scenario to solve a question. If you will be nervous, if you'll think how I'm going to solve the question. So a problem is there. I have noticed whenever you see a question, whenever a student reads the question, he try to solve the question completely. Suppose I am reading this question number 3. Navneet wants to ask something. Can we unmute Navneet? Just a second.
Good evening, sir.
Good evening.
Actually, sir, I have a doubt that if you have claimed 2 lakh of interest for self-occupied house and it came as a loss, okay, and there is no limit of interest for let out house, that means we can claim what the actual interest we have paid for let out house, we can claim. So,
Yes.
sir, I want to know that because the same entity has two houses, one is let out and one is self-occupied, and the same entity has paid the interest. So, why he cannot claim for let out that uncertain amount.
Because the provision says you can deduct the interest from the house only for which loan has been taken. So loan has been taken for Ahmedabad property. So the interest
Okay.
amount you cannot switch to your New York property. Even the assessee is same, but it is the provision of the Income Tax Act. The
Okay.
interest can be only deducted from the property for which loan has been taken. So the maximum interest rate 2 lakh rupees you can adjust against your New York property, but your question is logical. But as per the provision, we have to follow the provision. And because loan is not exist for New York property, so interest cannot be claimed under the head income from house property from New York property. But
So it
only
will
2
be
lakh
carried
rupees
forward.
loss can be adjusted.
It will be carried forward for eight years, like
Yeah.
which is
No, no.
possible.
Now it depends. Do you have any other income or not? So if you have any other income, then you can go for interhead adjustment also.
Yes, yes.
And else you can carry forward. So this extra loss, extra 1,95,000, that cannot be carried forward because maximum 2 lakh rupees adjustment is allowed. You have already claimed it. So now there is no loss remaining. This
Okay,
195
so
you
sir,
cannot carry forward. This is zero.
I cannot carry forward 1,95,000.
No, 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 no. Understand? Okay, fine. Let me show you with the help of the sheet. Then you will be able to understand what I'm trying to say you. Suppose it is like this. Out of this 395, you have taken 2 lakh over here. Fine. Now this is end. Finish. You just can consider only 2 lakh. And now you adjusted 2 lakh from this value. So this is also ended. So this 195 has no treatment now left. But yes, there is a provision of section 80 EA, 80 EA, which is under deduction topic.
Yes, sir. For extra
In
fifty
that, you
thousand.
can claim the benefit of this interest if as per other condition has been fulfilled. So property value given a time of sanction should be there. But under house property, the provision has been ended.
So if the SSC has the profit from the business income, so it can be set up from that as interhead statement.
Yes, yes,
Adjustment.
this 2 lakh rupee, but no, 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 you are still getting confused. Look, current year interest in this question was 3 lakh.
Yes, sir.
One fifth of PPI is 95,000. I
Yes.
have total interest of 3 lakh 95,000. Now, self-occupied property provision says you can only take under income from house property. Under income from house property from this house, you can only consider 2 lakh rupees as interest. Fine.
Yes.
So this
Yes.
would be my loss. Now forget about this. The remaining 195, just forget about it. The 195 is still there. They will not form part of house property loss now. This 2 lakh rupees would be my house property loss. Now in this question, I have a New York property also having income of 3288600. Understood? So
Yes.
this loss has been set off from this value. So now
Okay.
remaining house property income 3088600. Now this loss has been finished.
Yes.
Now what we can do with this 195? Now this loss cannot be set off from any head of income because it is not gone under income from house property. This is extra interest. This extra interest benefit you can claim under deduction topic of section 80C-80U. There is deduction under section 80EA, 80EA regarding this. So you can claim this over there if the deduction condition has been satisfied. But under income from house property, once you take 2 lakh rupees over here, then the remaining interest provision has been finished.
So 1,95,000 we cannot do
We
like
cannot claim the benefit of 195 under income from house property or against any other head of income. Deductions may be applicable, but because for that deduction, there must be information regarding the value of house, when the loan sanction date, etc., which has not been discussed in this question. For the house
yes.
property, this 195 is now useless.
Thank you, sir.
Okay. So moving on further, students. Arun Sagar Paying said, yes, Arun, so we can claim, but for that purpose, you need to know the house property value, etc., which has not been given in the question in detail. And in the question, of course, only income from house property need to be calculated. So we stop that question over here. Yes, for 195, you can go through and read section 80EE, 80EEV. If the condition has been satisfied, then you can claim the benefit of it. Okay, now question number 3. What I was saying that when a student generally go through a question, they try to understand the solution of that question. They start thinking how I'm going to solve this question. And suppose if there is a point, they read this point and maybe they do not know how to solve this question. So they'll start panic. You do not need to do this. First of all, read the question. If there's any point you do not understand, just do not get panic. Do not be nervous. The points you already know how to solve. First of all, try to solve them. So that will boost your confidence. And we have to arrange things like for the purpose of solution of salary income, I have to find out the basic salary, allowances, perquisite. Once I will solve all points separately, I will be able to solve the full question also. And if there is any point which is very difficult and you think that you do not know the solution, so don't get panic. First of all, try to solve those points you are confident about. Like question number 3. Priyanka, General Manager of ABC Limited, Mumbai, furnished the following particulars for the financial year 25-26. Salary 40,000, medical facility, rent-free accommodation, housing loan value has been given, dining table was provided, personal purchase through credit card. Okay, these are all things. But now I need to say what is the requirement of question. They are asking for compute the gross total income of Miss Priyanka, assessment year 26-27, if she exercised the option to shift out of the default tax regime. So we have to solve this question under optional tax regime. And the question is to calculate GTI. But because this is the class of revision of house property and salary, so we will only solve the salary part and house property. Clear? So now read the question. Now we'll start solving it. So this is optional tax regime. Salary has been given in question. 4,80,000 rupees salary. Medical facility in a hospital. Now you can read maintained by the company. This is very important. If the hospital is maintained by the company, then what will happen? Either is going to be taxed or exempted. We just discussed this kind of point in question number 1. Now it would be fully exempted. Very correct. So now medical facility is exempted because the hospital has been maintained by the employer. So this is not going to be taxed. Nil value. Rent-free accommodation owned by the company during the previous year 25-26. So now rent-free house value and house has been owned by the company. So if the property has been owned by the company, how we find out the taxable value of rent-free house? If it is unfurnished, it is unfurnished. Navneet is saying very correct. Unfurnished, then 10% of salary, but it will depend upon the population. So you can see the question says Mumbai. And the population, of course, exceeding the specified limit. So the 10% value would be applicable. 10% of salary. And salary means all monetary payments. For the purpose of rent-free house, the definition of salary is very interesting, very technical. It says all monetary payments, including bonus, commission, etc. But dearness allowance would be only considered if that is as per retirement benefit. The good news in this question, there is no dearness allowance has been given. And the monetary payment is only 4,80,000. So my rent-free house value would be 48,000. Now point number 4. Housing loan of 7 lakh given on 1st April 2025. An interest rate of 6% per annum. No repayment made. Interest rate charged by SBI is 9.5%. So A loan you have been provided by the employer, the market rate is 9.5%. And the rate has been charged as 6%. So technically you have the advantage of 3.5% rate of interest. And 3.5% I need to calculate on this principal value. And because the loan has been given on 1st April, that means we have to calculate it for full year. So from 1st April till 31st of March. So the interest value taxable, concessional rate of interest in case of house property would be 24,500. Point number 5 is interesting now. A dining table was provided to Priyanka at a resident. As a resident, this was purchased on 1st June 22 for rupees 60,000 and sold to Priyanka on 1st May for rupees 30,000. This is an interesting point. You will see why I am saying it's interesting. Can you tell me the provision of this dining table? What do we need to do? Navneet is saying 10% SLM. Okay. Any more suggestions? Mahalakshmi is saying 10% SLM. Read this point again. Let me tell you. Not that easy. You have to read the information. You have to read the question very properly. If I have marked a star on it, what does it mean? Would it be that simple that you will write it down 10% SLM and it would be like this? There is something else in this question. Ajay is saying 10% of cost, WDV. No. Nagaraja is saying WDV. No. Less depreciation for cell. Pasala is saying no. There is something else also, student. That's what I'm saying. It's important point. So these kind of point you have to mark for the purpose of revision. What will happen in a simple question of 6 marks? Examiner will give you 4, 5 very simple point. As you can see in this question, point number 1, 2, 3, 4 is too simple to solve. Anyone can solve. But yes, this 5 point would be a point in majority of the student maybe do mistakes. And I can see all of the answer I have received till now is wrong. So now you can see you all are ready for your examination. And this examination part, still this point is not yet solved correctly. Even when you are not nervous because you are not in the examination hall, you are at your home, you are very free, you have notes, you have calculator, you have everything. You have notes, still you are not able to solve. Nobody has given the correct answer of this point till now. Arun Sagar is saying 18,000. No. Diya Jan is saying furnished. Ajay is saying 30,000. No. You are not reading the question, student. Until you understand the question, you won't be able to solve it, even you have the notes, study material in front of you. So there is something, Pasla is saying 20%. No, not correct. You're not reading it properly. Let me show you what exactly this question has hiding. This point is hiding in itself. A dining table was provided to Priyanka at her residence. This point is having two provision, two perquisite. A dining table was provided to Priyanka at her residence and sold to Priyanka on 1st May 2025. So it has been given for use also. So this dining table was always with Priyanka. And sale has been done on 1st May 2025. But for the purpose of use only for 1 month, April 2025, you have to calculate first the use value also, and then for the purpose of sold value. So you have to find out two values. There was provision we have discussed when asset has been given for use. So in case of laptop, it was nil, for other properties, etc. And for other asset, it was 10% per annum if it has been given for use. So if you read the first line of this question, a dining table was provided to Priyanka at her residence. That means employer already given the dining table to her, but sold to her on 1st May 2025. So that means for April 25, she was using dining table, but she was not the owner. So for that 1 month, the use provision would be applicable, and for on 1st May 2025, that SLM or sale provision would be applicable. So how we will solve it? For the purpose of furniture or dining table, it is 10% per annum. So the value is 60,000, 10%, and per annum. For 1 month, the value would be 500 rupees. So the first point, this point value would be 500 rupees. Suppose if it has been sold to Priyanka on 1st June 2025, then we would have taken 2 months value over here. That would be 1000. Now the sale provision would be applicable. Now for the purpose of sale, first of all, we have to see completed year from the date of purchase and sale. You can see the property has been purchased on 1st June 2022. And it has been sold to Priyanka on 1st May 2025. So how many year has been lapsed? How many completed year has been lapsed? I have to apply 10% SLM method. Navneet is saying 3 years. Are you sure from 1st June 2022 till 1st May 25? There are 3 years because we have to find out the completed year. Completed year. Yes, the complete year are only 2 years. Because 3 year would have been complete on 1st June. So it's 2 year, 11 months. And we have to take the complete year. So only 2 year SLM method value we have to calculate on 60,000. So 60,000, 2 years SLM value would be 12,000. So the value of that dining table was, as per income tax, must have been 48,000, which has been sold for 30,000. So the benefit to assessee would be 18,000. That is going to be taxable value. So the use taxable value is 500 and the sale taxable purchase value is 18,000. Suppose in this question, if this line was not here, suppose this line was not given. The question is only from here. One dining table purchased on 1st 6 to 2020 for 60,000 and sold to the employee on 1/5/25. Then only this provision would have been applicable. But because the first line say a dining table has been provided to Priyanka, so that means it was always with Priyanka before even 1st May. So for that time, she was not the owner. So we have applied the provision of use, and after that, we have applied the provision of sale. Understood? What about 500? 500 is taxable perquisite. This is also taxable. This is also taxable. So the taxable values are this. She used from 1st April 25 till 30th April 25, not on 1st May, because on 1st May the property has been sold. Okay, Mr. Namni? Chalo. Next is personal purchase through credit card provided by the company amounting to 10,000 was paid by the company. No part of amount was recovered from Mrs. Priyanka. So personal payment of employee paid by employer, that would have been taxable. The tax value would have been 10,000 rupees. Obligation of employee met by employer. A Maruti Suzuki car was purchased by the company on 16/7/23 for 250. Now you can see in this case, use is not given. This is in difference point number 5 or 7. If you want to understand the difference between point number 5 and 7. So now you can see in this car case, directly property has been sold to the employee. Understood? Chalo. So now we will apply the sale of car perquisite. We will find it out. So the car has been purchased by the company on 16th July 23 and it has been sold on 14th July 25. So how many completed year? And for the purpose of car, what is the rate? Yes, correct. 20% WDV. So how many year, complete year has been passed? Ajay is saying 1 year. Are you sure? It's at 1 year? Miss Malakshmi is saying 2 year. Very good, Malakshmi. Anyone else? Navneet is saying, sir, if someone assume that she's using. No, you cannot assume it. Because in the point number 5th that has been given, it was provided to Priyanka at her residence. So you can assume that she was using the dining table. But in case of car, it has not been written that the car has been provided to employee. It has been just sold to employee after a certain time. So you cannot take that assumption. That would be a wrong assumption. So the number of year would be, no, correct, Navneet. Okay. Yes, we are assuming that she is using that dining table from 1st June 2022. We are assuming it that she was using it from 1st June 2022. But for our previous year 25-26, it is only for 1 month calculation. So if we are going to solve the question, suppose 1 year back, 24-25 assessment year, then for full 12 month, we will take the use value. We are assuming that the dining table was using for from 1/6/2022 by the employee. Sure. So for the purpose of car, the one complete year is there only. That is not 2 year. Yes, Navneet. For preceding previous year, we need to take 12 months. For the purpose of car, it's 1 year, 11 month and almost 28 days. So it's not completed 2 years. So we have to apply only 1 year depreciation for the finding out the value. So it was 250. The rate is 20%. So that would be 50,000. So 2 lakh rupees car has been sold to employee for 160. So the perquisite value would be 40,000 rupees. So the taxable value of perquisite in this case would be 40,000. Other income information has been given, which is not for salary purpose, interest, etc. The PPF information has been given, that is for deduction purpose. For the purpose of salary, if you will total all these taxable value, that would be 621,000. Out of this, reduction would be 50,000. So that would be 571000. I hope it's clear now, students. So this point, these 2 points are really important for the purpose of examination. So please mark these points and understand when the question says it has been provided and later on it has been sale, then you have to apply the use and sale both provision. If it is directly sale, no use case has been given, then only sale provision need to be applied. Moving on to next. Mr. Ram, an employee of the central government, is posted at New Delhi. He joined the service on 1st February 2021. Detail of his income for the previous year 25-26 are as follows. Can you tell me, do I need to underline any information which is relevant for the purpose of this question? Can you see any important information in this sentence, 3 lines? Yes, Kuldeep, absolutely correct. I did not mark it because I wanted you to understand that yes, this is important information. What it affects? It affects the taxability of a lot of perquisite. You can claim the entertainment allowance deduction, the rent-free house taxability would be different, gratuity would be exempted, pension would be exempted, leave in cash would be exempted, etc., etc. If that would have been given in the question. So this is one important thing. Basic salary has been given, dearness allowance has been given. Both Mr. Ram and government contribute to NPS scheme. Gift is income from other source. Ram gifted us sum of rupees 2 and so start business, clubbing provision, I guess. This is also clubbing, etc. A TC deduction not relevant for our house salary provision. This is also not relevant. Any other information? No. Ignore the provision of section 115 BAC. So that means we have to calculate it as per optional tax regime. Joining date from 1st February 21. So now solve this question. Easy question. Basic salary 380. DNS allowance 120. Because 40% as per term, so I have to write it down like this, 40% term. So I would remember to solve this question. Now, both Mr. Ram and government contribute 20% of basic salary to the pension scheme referred to in section 80 CCD. So whatever amount has been contributed by the employer for NPS scheme, which has been under section 80 CCD, is going to be form part of the salary. So this 20% of basic salary would be 76,000. That's it. That would be 5,76,000. Deduction would be 50,000. And remaining would be income under the hat salary. So this question is more relevant for clubbing provision, etc. This is not much provision regarding the salary topic from this part. Yes, minor son wala club hoga, but that would be the case of the clubbing concept. Okay. Employer contribution reduction, of course, we can claim under section 80, CCD2, etc. Coming on to next question. Mr. Salesh is a marketing manager in Smile Limited. From the following information, you are required to compute his income chargeable under the hat salary for assessment year 26-27. He has opted out of section 115 BAC. So in these line only, this information is important that he has been opted out. That means we have to solve the question as per optional tax regime. Clear? So let's solve it. Basic salary has been given in question 70,000 per month. So that would be 8,40,000. DNS allowance is given 40%. That would be 3,36,000. If the question is silent about whether it as per retirement benefit or not, what we will consider it as per retirement benefit or not? That would be considered as not as per retirement term. So we will write it down NT. That means not as per retirement term. He is provided health insurance scheme approved by IRDA for which 20,000 incurred by Smile Limited. So can you tell me the treatment of health insurance paid by employer for employee? Is going to be taxable or not? The answer is non-taxable. If it is life insurance premium, then it's going to be taxable perquisite. But health insurance premium is not a taxable perquisite. Now received rupees 10,000 as a gift voucher on the occasion of his marriage anniversary from employer. So the gift voucher is a perquisite going to be taxed. But now in this case, there are two options because there is a gift exemption is 5,000 if it has been received from employer. So either we can tax 5,000 out of 10,000, we can assume 5,000 exempt and the balance 5,000 we can tax, or we can tax the full 10,000 value also. You have both option. You can apply as you want, but I would suggest if it is exceeding 5,000, apply the taxable, the full value. Okay, this would be the better option for you. Next point number 5 is just like the share perquisite, what we have already gone through. Smile Limited allotted 800 sweat equity share in August 25. The shares were allotted 450 share and the FMV was 700. So we have the benefit and the benefit comes to 2 lakh rupees. Now again you can see he was provided with the furniture during September 21. The furniture is used as his residence for personal purpose, the actual cost of furniture is 110. On 31st March 26, the company offered the furniture to him at free cost. No amount was recovered from him toward the furniture till date. So this is also a same point number 5, as we have discussed in the last case. तो इस केस में यूज भी है. On 31st March 26, the company offered the furniture to him at free of cost. Now you can see, on 31st March, company offered. So for the purpose of full year, we have to tax the value as for the purpose of use. And it has been sold on 31st March. So we will see how much sale value could be treated as the taxable purpose. First of all, the furniture value 1,10,000, 10%. That is for full month. So that is going to be taxed 11,000. Now, because furniture does fall under the category on which we have to apply SLM provision. So now the sale provision we have to apply as a perquisite. First of all, we have to see how many completed year it has been used. So from September 21 till March 31st March 26, how many year has been gone? So there would be total 4 years. September 21 till September 22, September 23, September 24, 25, and September 26 would be the 5th year. But that would be 4 years total value. So we have to apply SLM 10% for 4 years. That would be 40%. So 44,000 would be the value of this 40% from 1,10,000. And the remaining would be 66,000. No amount has been taken from the employee. So full 66,000 would be my taxable value. Any problem in this point, students? It is 4 years from September 21 till March 26. It would be 4 years and some months. In September 26, it would complete 5 years. But till 31st March 26, it would have been 4 years and some months. Is it clear till now? This perquisite treatment has been clear. This is very important. You can see this is again the same kind of perquisite we are solving. So you can understand if this is a part of your MTP, RTP, etc. So that has a hint for all of you that this is a very important point for the purpose of examination. Okay, next is point number 7. So employee receive entertainment allowance also, and that is 10,000 rupees. So that is going to be full taxable. Sir, already calculated 25, 26. Why again depreciation? Oh, where we have calculated already. This is for use of furniture. What we have calculated for 10%. Use treatment of perquisite we have done. For the purpose of sale, we have to take how many completed year has been passed before transferring that asset to the employee. From September 21 till March 2026, there would be 4 years. So it does not matter that we have already taxed, because we have taxed on the basis of use. But this is the taxable value for the purpose of sale. Where 10% is given, Aditya is asking. Aditya, it has been given in the provisions. If you will go through the provision of salary topic, there is a perquisite which says taxability in case of use of asset. In that, you will see laptop is nil, car and other asset as per the rules, and any other asset 10% per annum is going to be taxed for the purpose of use. In that other asset, all furniture, etc. has been included. Kuldeep has been written the page number also for your help. Aditya, 3.88. Thank you, Kuldeep. So, entertainment allowance has been taxable. Now, housing loan treatment. Housing loan 4.5% per annum provided by Smile Limited, amounting outstanding as on 1st April 25 is 15 lakh. Rupees 50,000 is paid by Mr. Salesh every quarter towards principal starting from June 25. The landing rate of SBI for similar loan as on 1st April 25 was 8%. This is again very, very important point. This kind of question we have solved in illustration of study material when we were going through the notes. So let me solve this point separately. So the information of question was, the question says he has taken a housing loan at the rate 4.5% per annum. Loan amount has been given in question 15 lakh from 1st April 25. The SBI rate is 8%. So this housing loan purchase is very easy if there is no repayment of principal amount has been given in question. Because if no principal amount repayment has been given in question, then what do we need to do? 15 lakh rupees multiplied by the difference between SBI rate and this housing. So that would be 3.5% and we can solve it for the full year. But no, in this question, the question says that Shailesh is paying principal amount. Principal amount from June 2025. He is paying June 2025 50,000 rupees as principal amount for every quarter. Now you have to find out the outstanding amount of loan at the end of every month. So now you have to find it out the outstanding amount at the end of every month for applying the perquisite provision. And for the purpose of that, we have to see how much loan was outstanding April, May, June, July, August, September, October, November, December, January, February, March. So he start paying from the month of June. So technically in April, the full 15 lakh was the outstanding amount. In May also, the outstanding amount would be 15 lakh. But from June he paid. So from the end of the month, the value of outstanding would be 14.5 lakh because at the end of the quarter he is paying 50,000 at the end of each quarter or in each quarter. So at the end of the quarter, we will take the value would have been remaining 14.5 lakh. Again, for July, it would be 14.5 lakh. For August also, it would be 14.5 lakh. And from September now, it will change again 14 lakh for next 3 months. And from this, now it would be from December, 13.5, 13.5, 13.5, and for March, it would be 13. So now when we have discussed this provision under our normal class, then there is two options to solve this question. Either apply this difference of rate 4.5 and 8, 3.5% on every month value, like 15 lakh multiplied by 3.5% upon 1 upon 12. either you need to calculate the interest 12 times, the perquisite value 12 times, then you will find out the total of this. Or there was a shortcut I told you that please do the aggregate of all these outstanding balance at the end of each month. So this aggregate would come 169,000,000 and apply this formula on this aggregate value at once. This is 3.5% for 1 upon 12. So the answer would remain the same, 49291. So that would save your time. You need not to apply the interest 12 times. You just need to calculate it at once. And of course, if any interest calculation gone wrong, so your total answer would be wrong. So you just need to focus on the totaling of this value. If you're able to find out the principal value outstanding at the end of each month correctly, then you just need to aggregate all of it and you have to apply 1 month interest value on that value. So that would be your perquisite value 49291 for the purpose of our solution. So this perk value would be now housing loan concessional interest perk value would be 49291. Difference is taken from SBI rate and the rate we have to pay to the employer, 8% minus 4.5%. Okay, Mr. Aditya, that would be 3.5%. Facility of laptop costing 50,000. Okay, who will tell me the answer of this point number 9? What do we need to do? Kuldeep is saying if used. No, facility of laptop costing rupees 50,000. That means a laptop has been given to the employee for use, of course. So the value would be always nil. Clear? So if you will calculate, total value would be 1522291, 50,000 deduction. So my net salary would be 147,229. So again, please do revise this point and this point both again. For the purpose of examination, these points are again very, very, very important. Moving on to next question. Mr. Kamal. Easy question. And this is for income from house property. Aditya is saying, sir, how 169,000 is there? Aditya beta, we have solved it, na? Totaling. This 15 lakh, 15 lakh, 14.5, etc. The total will come to this. If you'll aggregate this, this would be the value, 1 crore 69 lakh. This is optional region we are solving. Nagaraja is saying, sir, entertainment allowance, government. Yes, entertainment allowance deduction could be claimed if it would have been a government employee. It is not so in this question. Next is question number 6. Mr. Kamal are resident but not ordinary resident. So resident but not ordinary resident is there. In India, during the assessment year 26-27, he owns 2 houses, one in Dubai and the other in Mumbai. The house in Dubai is let out there at a rent of so and so. The entire rent is received in India. This is the kind of question we have already solved, that New York and India question, it was there. He paid property tax of so and so, and you can see the other tax is 1,500. For financial year 25-26, the house in Mumbai is self-occupied. He had taken a loan of the house on 1st June 22 at the rate of 12%. The construction was completed on 31st May. He occupied the house on 1st June 24. The entire loan is outstanding as on 31st March. So this is the same kind of question as we have solved earlier. I guess that was question number 2, I guess, or 3. So you can solve this question. Yeah, the question number 2 is similar to it. So you can try this question yourself. Moving on to next question. Question number 7. Yogesh constructed a house in previous year 1718 with 3 independent units. Now, this is very interesting question, a good question to solve. During the previous year 25-26, unit number 1. So unit 1 consisting 50% area. It is let out for residential purpose at a monthly rent of 20,000. So it is let out. Till now, it is let out. Rent of January could not be collected from the tenant. So that means unrealized rent is also there because some part of it has not been recovered. Notice to vacate the unit was given to the tenant. No other property of Mr. Yogesh is occupied by the tenant. Unit number 1 remains vacant also for February and March. So it's let out, unrealized rent and vacant also. 3 cases unit 1. Okay. Unit number 2, 25% floor area is used by Mr. Yogesh for the purpose of his business. So if you are using any house property for your business, that would not fall under income from house property. So there is no treatment of unit number 2 under income from house property. Unit number 3 remain 25% is utilized for the purpose of residence. So this is unit number 3. And that is self-occupied. So unit number 2 is for business. So it is not going to be covered under income from house property. One is let out, unrealized rent and vacant. So can you tell me which case is applicable in that? When we have gone through with the provision, can any one of you tell that which case is going to be applicable in unit number 1? If it is let out plus unrealized rent and vacant also. Nagaraj is saying deemed let out. No, it is not deemed let out. When we have discussed income from house property chapter in detail, I have made 7 different cases. A, B, C, D, E, F, G. So can you identify when these 3 conditions fulfill? Let out, unrealized rent and vacant. Which of these A, B, C, D, E, F, G case is applicable? So that will help you to understand how to solve this question. Any one of you can tell? Kuldeep Nagar is saying unrealized rent. Yes, unrealized rent is there, but I'm just asking, do you know which case we can apply in this if you have revised the provision of income from house property? So you maybe understand which case need to be applicable. Ajay is saying G case. No, Ajay. G case for let out and self-occupied only. Either the property was let out for the part of the year or self-occupied. So that is not for G case. When let out and vacancy is there, let out and vacancy, then it is case number L. So it's a special case. When case F applicable, there is a very strange, or we can say very different kind of method to calculate the GAV, which we will solve in this question. For the purpose of GAV, of course, the pattern says you have to find out the municipal value, fair rent, whichever is higher, the higher and standard rent, whichever is lower. And standard rent need to be compared. In case of F, in other case, it needs to be compared with actual rent received. But in case of F, it needs to be compared with annual rent. Gopal is saying D case self-occupied for part of the year, let out year for part of the year. Case number 5. This is technically, you can say case number 6 we are discussing. So we will solve this question So after the break, we will solve this question. Till that time, kindly find out the higher value from this question out of these two values. Then find out the lower value from higher and standard rent. And then find out the this value. This value you have to tell me when we will resume. I will expect that someone from you will tell me this value and annual value. Then I will calculate with you and I will show you how to find out the GAV in this question. Let me see if there's any query. Else we will leave for a short break. Any query, students? Mr. Nagaraja is asking, sir, previous question, entertainment allowance deduction, why not taken? Because entertainment allowance deduction can be claimed only in case of government employee. And in this question, you can see in this Smile case, he was not a government employee, the marketing manager in Smile Limited. So it is not a government employee. If he would have been a government employee, then definitely we are going to give the reduction for entertainment allowance. Okay. Diya Jain is saying insurance payment made by employer exempt except life. Yes, health insurance premium paid by employer is exempted. Life insurance is taxable. Mrs. Chetra is saying for SR value. So you have to calculate the SR value. When we will be back, I will ask you what is SR value according to you. Then we will solve that question further. So I guess there is no query right now. Mrs. Chetra already gave me the answer of that SR value, 2,78,000. We will see, is it correct or not? So Manishi, can we go for a small break? Okay, so welcome back, everyone. I believe you must have your coffee, tea, etc. And I asked you to calculate the value in this question, what we were discussing, and the answer has been provided by some of the student is 2,78,000. Okay, so now let's solve this question. Okay, so when we were going through that question, we have seen that 50% of the part of that property has been related to the let out portion. So when we will solve this municipal value and fair rent, municipal value has been given 2,88,000. So student, the municipal value for 50% portion we have to consider. That would be 1,44,000. And so on, municipal value, fair rent, and fair rental half value would have been 1,49,000, whichever is higher. So that would be 1,49,000 higher value. Second step, this higher needs to be compared with standard rent, which has been given 2,78,000. So the 50% value would be 1,39,000. Out of these two values, lower needs to be considered, and the lower value would be your standard rent. This lower value is 1,39,000. Clear? Now we have to compare this value with our annual rent. The annual rent needs to be taken on the basis of the actual rent multiplied by 12. So actual rent is 20,000. And if you multiply it with 12, my annual rent would be 2,40,000 rupees. Clear? But before comparing this annual rent, which is 2,40,000, if there is any unrealized rent, we have to reduce it first. That we have discussed in the provision. So we have to reduce the unrealized rent now, which is for 1 month, 20,000. So now the comparing value would be 2,20,000 with 1,39,000. And the higher would have been the value, but it is not yet GAV. From this higher value, we have to reduce now vacancy time duration rent. So vacancy is for 2 months. So for 2 months rent, we have to reduce. That would be 40,000. So now this 1,80,000, that is going to be my GAV. We have discussed this kind of calculation in detail in our normal class. So if any one of you have not gone through with the normal class of income from house property, I would suggest you, I request you all, please go and watch case number F solution, what we have discussed in detail with the help of multiple illustration in our normal class of income from house property. Only after going through that provision in detail, you will be able to understand how we have arrived at this GAV of 1,80,000 rupees. So now my GAV is 1,80,000 rupees. Out of this, we have to deduct municipal taxes, which has been given in question 30,000. 50% we will consider only. So that would be 1,65,000. Now, out of this value, 30% deduction, statutory deduction we have to claim 49,500, and interest value also given in question 90,000. So 50% of it needs to be reduced from here. So that would be 70,500 rupees from this let out property, house property value. Unit number 2 was for business purpose. So no treatment under income from house property. Unit number 3 was self-occupied. So annual value would be automatically nil. We can only reduce the interest value in case of self-occupied property. Can you tell me how much interest we can reduce in this third unit value? Can you tell me what amount of interest we should reduce from this self-occupied property, which is unit number 3? Let me see. Somebody answered. Kuldeep is saying nil. Ajay is saying 25%. Chetra is saying 30,000. Nagaraj is saying 25%. Miss Veera Machani is saying 22,500. Aditya is saying 25%. Anyone else who would like to give their answer? And the correct answer is nil. Because this is section 115 BAC. And in the starting of the class, I have told you if you are falling under section 115 BAC, then in case of self-occupied property, interest is not allowed to be deducted. So because we are under default tax regime, so self-occupied property cannot take the benefit of interest. So the answer is 70,500 rupees from income from house property. Okay. So next question. The particulars given below are of Mr. Radhe, income, age 47 years, posted in a private company in Delhi from the previous year. So only Delhi is important from this information. And now I need to know what is the requirement of question. So you are required to compute the taxable salary assessment year so and so under default tax regime. So we have to calculate the salary income under default tax regime. First is basic pay, and the basic pay has been given 35,000 per month till January, and from February 40,000. So that means for 10 months it's 35,000, for 2 months is 40,000. Total would be 4,30,000. Dearness allowance, it's saying 30% of basic salary. So 129,000, out of which 54% as per terms of retirement benefit. Now point number 3 is for rent-free house. This is a point which says his employer gave him a rent-free accommodation fully furnished in Delhi from 1st April 25. This house is owned by the employer. So because the property is in Delhi, house is occupied by the owners. So 10% of the salary we will take as a perquisite value. The furniture appliances provided with the house were bought by the employer at an aggregate cost of 1,50,000 on 1st April 25. Electricity and water bill costing is 4,000 per month paid by employer. So if you see it closely, it is a furnished house. So for the purpose of furnished house also, first we have to calculate the unfurnished house value, and which would be 10% of salary. Salary for the purpose of rent-free house would be the basic salary, and we will take DA only 54%. So that would be 4,30,000 and DA 54% would be 69,660. So 10% of it, if we will consider, that would be 49966. This would be house accommodation value. Now we will add the furniture cost in it. The furniture cost has been 1,50,000, and again 10% per annum, the taxable value would be 15,000. Electricity, etc., also paid by the employer. So it is an obligation of employee, which is paid by employer. That would be 48,000 rupees. Now, point number 4 says the employer also spent 50,000 on a refresher course for upgrading Mr. Radhe's skill. So, what should be the treatment of this information and why? Navneet is saying taxable. Okay, anyone else? Not uniformity. Diya Jain is saying non-taxable. Why, Diya? Why it is non-taxable? What is the reason behind it? Anyone else? Official purpose. Well done. Very good. Because a refresher course is for upgrading Mr. Radhe's skill. This is not his personal benefit. Upgradation of his skill will help him to perform his duties well than earlier stage. So that's why that is going to be exempted. Always remember, refresher course, training course, any kind of course which is going to upgrade the skill of Mr. Radhe is going to be exempted. No, Mr. Nagaraj, even if it's not for all employee, still it's not a perquisite. It is not for the personal benefit of employee. It is for the benefit of company or the employer. That's why it is not an obligation of employee met by employer. So this is not going to be taxed. Next is point number 5. It says, during the previous year, his wife had been admitted in a notified hospital for the treatment of her kidney disease. The hospital bills amounting to rupees 3,50,000 were paid by the employer. So now you can see there is two information which is relevant in these lines are notified hospital and kidney diseases. So it is a severe disease definition, and in that situation, this is also going to be exempt, not going to be taxed. Notified hospital and specified disease definition. So now my gross salary would be 6,71966. Standard deduction would be 75,000. So taxable salary would be 596,966. I hope it's clear. Any doubt in any point of this question? Okay. Why it is exempted, which are taxable? Mr. Aditya, you have to go and watch the lecture regarding medical facility. When we have taken the full class upon it, then you will be able to understand why it is exempted and what are the taxable perquisites. So please do watch those lectures, okay? Now, this is a very, very interesting question. And before solving this question, let me give you this thing. This point number 7 is utmost important, and there is no question, I think, in illustrations also, and not even test your knowledge question also. This kind of point has been asked. This point has been given in your study material. But this kind of question based on this point has not been given in your study material illustration, or even not your in test your knowledge question. But the provision regarding this point, if you need to find it out, it is on page number 3.77 of your study material. the information which is given over here. So before starting, Nisha is a marketing manager in Rose Limited. She gives you the following detail for previous year 25-26. And what is the requirement of question? You have to calculate the income under the hat salary if under optional tax regime. So we have to calculate the income under that salary under optional tax regime. So Navneet is asking, what is salary for a specified employee? 50,000 or change. It has been changed. You have to go through the notes also, what we have uploaded there. It's now 4 lakh rupees, correct. So we have already discussed these kind of provisions. So you have to go and you can find out in the notes also and in the class also. So optional tax regime, first of all, basic salary, which would be 5,40,000 in this question. DNS allowance, 10,000 per month, that means 1,20,000, out of which 30% is for terms of employment. Next is a bonus is equivalent to 1 month basic salary. So I will take the bonus 45,000. Now point number 4 is important. So point 4, point number 5, point number 7. These are important points in this question. She contribute 18% of her salary, basic pay and DA towards recognized provident fund. And the company contribute the same amount. So in case of contribution to provident fund, we know that up to 12% of the contribution is exempted and any excess of more than 12% of salary is going to be taxable. So now we have to see how much excess he has paid. So recognize provident fund provision, we have to solve. So the contribution is 18% of salary, basic pay and DA. So because employer is paying 18% of basic salary and DA, that means 540 plus 1,20,000, 18% we are paying. That would be 118800. Clear? 540, 120, 18%. Correct. So because employer contribution does not say that he is paying only terms DA value as a contribution. It says 18% of salary, basic pay and DA. But for the purpose of exemption, up to 12% of salary, in that salary, we will take only basic salary, DA term, and percentage commission on sale. So employer can contribute any percentage of full DA, etc. But for the purpose of exemption, we need to take only basic salary, DA term and percentage commission on sale. Understood? So 12% of basic salary would be, commission is not in this question. So if you will now take, that would be 5,40,000 and 30% of 120, that is 36,000. So 12% of this would come 69,120. So the excess value, which is 49680, this excess value is going to be taxable perquisite. Clear? This is a good point for your practice. Next is point number 5. Now motor car. I believe you must remember the permutation combination, the huge perquisite of motor car. So it has different applicability. If his car is owned by employee, then who is paying the maintenance expenditure? Car owned by employee, expenses paid by employee, having different treatment. car owned by employee, expenses paid by employer. Then there are three multiple cases. If car used full for official, if car used full for private, if car used for both cases. So, and then if car is owned or on lease by the employer, then there were two cases. Expenses paid by employee, expenses paid by employer. And both of those two cases having three multiple situations. Car used for official purpose only, private purpose only, and both. And same three cases in the last case also. So again, I have told you that if you want to solve that car perquisite, you have to find it out. Which case is applicable? My question is falling in which situations. So if you would be able to find out the correct situation, then you will be able to find out the taxable value correctly. So motor car owned by employer. So good news, it is owned by employer. So there were two cases, owned by employee, owned by employer. So this case has been gone. Now the car is owned by employer. 1.6 liter engine cubic capacity exceeding. Okay. Provided to Nisha from 1st November. So our car perquisite should be start from 1st November 25 till 31st of March 26. So it would be November, December, January, February, March. That means we are calculating 5 months perquisite, which is used for both official and personal purpose. But before that, I need to know who is doing this expenditure. Repair and running expenses of 50,000 were fully met by Miss Nisha. The motor car was self-driven by the employee. So the expenditure has been met by Nisha, and that means expenses met by the employee. So you can see if the car has been provided by the employer and repair and running maintenance are met by the employee and car is used for both purpose. And if it is exceeding 1.6 liter capacity, so what is going to be taxed? The taxability would be 900 rupees per month. So the taxability would be 900 rupees per month. Driver has not been provided because the car was self-driven. So 900 rupees per month into 5. So the taxable value of car would be 4,500 rupees. So car is owned by employer, expenses met by employee, and it is used for both purpose. So the third case of employee would be applicable. That is 600, 900. So if the car capacity is less than 1.6, then it would be 600. If it is more, then 900 rupees per month we had to take. And in this case, it would be taxable 4,500 rupees. Clear? So this perquisite has been solved. So if you will try to solve any point step by step, if you will try to understand this point number 5 by reading, motor car owned by employer, cubic capacity, this one provided to Misha from 1st November, used for official purpose, both repair running expenses, 50,000 met by Nisha, car self-driven. If you read this paragraph like this and you will start thinking, which case would be applicable, which would be the correct answer, 900, 1800, 2400, whatever it is, you will be confused. This is not the way. You would not be able to get the answer by reading the question. You have to understand that I have to apply the provision. First of all, you have to be clear, okay, car is owned by employer. My first problem solved. Now expenses met by employee. My second problem solved. Now car is used in for official and private both. My third problem solved. Now car is more than 1.6 liter capacity. So which case is falling? That case, and it is having 900 rupees per month. That's it. Only by this process, only by applying this technique, this tool, you would be able to find the answer easily. Otherwise, you will be messed up. So don't try to read the question and find the solution. You have to find out the content, the process, one by one. You will get the answer. Okay. Navneet is saying, sir, what if for fully personal? Then the information must be given in the question. If it is fully personal, then the 10% of the car cost needs to be taxed. So in that case, car historical cost or purchase value must be in the question. In that case, we will apply that. Okay, so the company pays medical insurance premium of 18,000 to affect insurance on the health of employees. So of course, we have seen that health insurance premium is exempt. So I was waiting for this point, and this point is a kind of point I believe you did not solve anywhere. So this is a very, very interesting point, and I do believe if that has been asked in the RTP, so there is a very higher probability that this kind of point could be there in the examination. Our employer gave him a rent-free accommodation in Mumbai from 1st April 24. You saw that. They are giving you the date preceding previous year. Previous year 24-25 information. The house was taken on lease by the Rose Limited for rupees 12,000 per month. So the house is not owned by the company, it is on lease. The perquisite value of such accommodation for the previous year 24-25 was 55,000. So they have given you some interesting information that they have given you previous year 1st April 24 that the property has been given from 1st April 24. It is on lease of 12,000 per month, and the perquisite value of such accommodation of last year taxable perquisite value has been given 55,000, and they are giving you some index also. Cost inflation index, generally this index has been provided in case of capital gain provision, but they have provided these things with your rent pre-accommodation provision. So what we need to do? First of all, let's calculate the rent-free house normal cases. So in this question, rent-free house, because the property is on lease. So if the property is on lease, then we have to take the 10% of salary or lease rent paid by the company, whichever is lower would be the taxable value. The Nisha is working. So we are taking 10%. And for the purpose of 10%, we have to take the basic salary, 540, plus we need to take 30% of it, 36,000. Bonus we will take 45,000. So the 10% of this value, if you will calculate, that would be 62,100 rupees. Clear? Up. No, Navneet, no DA term turnover percentage, if any. No, in case of salary for rent-free house, any kind of percentage commission, not percentage commission, bonus, all monetary payment need to be included. Okay. So now 10% of salary that comes to 62,100 or lease rent paid. The lease rent is 12,000 per month. So that would be 1,44,000 rupees for the year, whichever is lower. So the taxability would be 62,100. Now the problem starts. If it is a normal question, this is going to be my taxable value for rent-free house. But due to this information that the last year perquisite value for accommodation was 55,000. And the cost inflation index of 24-25, 363, and 25-26, 376 has been given. So now what is the reason of giving these values? So let's move on to the study material, page number 3.77 to understand this. Just give me a second. provision, salary, salary, and salary. So this is page number 3.77. We have to move, and I'll show you the provision over there. This is page number 3.77. So you might be seeing now, this is the provision I was talking about. Value of perquisite to be restricted to the cost inflation index. The provision says, if the last year perquisite value has been given in the question, in case of rent-free house, if the last year perquisite taxable value has been given in the question, then the current year perquisite taxable value cannot exceed the cost inflation index applicability value for the current year. So it says, because the last year index value has been given in the question was 55,000, and our current year rent-free house value was coming 62,100. So now you have to find out that the last year value was 55,000 and the last year index is 363. So if the last year perquisite taxable value is 55,000, then in the current year, it cannot exceed in proportionate to the cost inflation index. As the case we do in indexation concept apply in case of capital gain. So we have to apply the indexation concept on this perquisite value also, as we apply that in case of indexation. So this is my 55,000 is suppose cost of acquisition. So that is my last year perquisite value. So we need to check that this value should not be more than this value. So if 55,000 was the last year perquisite value, then after applying the cost inflation index, it could be maximum to 56970. So if the last year taxable perquisite value was 55,000 and after applying the cost inflation index, the value should be for the next assessment year, it should not exceed 56970. And what we have calculated, 62100. So technically we can say the perquisite value would be the perk value as we calculated, or this value 56970, whichever is lower. So my current year perk value would be 56970. So if in the question the last year perk value has been given and the cost inflation index has been given, then you have to index that last year perquisite value. And that index value or current year value, whichever is lower, would be my current year taxable value. This has been explained over here, where the accommodation is owned or taken on lease or rent. And this will be applicable only if the property is taken on lease or rent. If it is owned or lease, in all cases, by the employer, and the same accommodation is continued to be provided to the same employee for more than one previous year, the value of perquisite as calculated in serial number 2 above shall not exceed the amount so calculated for the first previous year as multiplied by the amount, which is the ratio of the cost inflation index for the previous year for which the value is calculated, and the cost inflation index for the previous year in which the accommodation was initially provided to the employee. So you can understand it in a simple way. The perk value of the current year, rent-free house value, as we calculated, or we need to find out the index value of last year rent-free house. This is 56970, and whichever is lower, that is going to be my taxable current year perquisite value. So this is a completely different kind of case what we are solving first time. So technically, this was my perk value of current year. And after applying the indexation on this last year perquisite value, the value would be 56970. So the lower is going to be taxed, and that would be 56970. So can you tell me, is it good provision for assessee, or that is not good from the point of view of taxability in the hands of assessee? So technically, it is beneficial to the assessee, because else the 62,100 is going to be taxed, but now only 56,970 is going to be taxed in the hands of employee. So this is a very interesting point. The first time I believe we are solving this kind of question. So that was the perquisite point. It is very, very important for the purpose of examination. Next is company incurred expenses on the treatment of her daughter abroad, including stay expenses of rupees 1,50,000 as permitted by the RBI. So if the RBI permitted, that is going to be exempted, no taxability. And 9 point, company also incurred expense in relation to the foreign travel for medical treatment of daughter of rupees 8 lakh rupees. So can you tell me what is the treatment of these foreign travel medical expenditure? Is it going to be taxed, or is it not going to be taxed? So what is the provision regarding taxability of foreign travel medical expenditure? Navneet is saying 80K. So should I tax it or should I not tax it? And what is the reason? Taxable for a specified employee, Pasala. No, not exactly. Permitted then exempted. No, not permitted is for point number 8. Point number 9 is having some different provision. Aditya is saying exempt, sir. No, Aditya. Why? I want to know why. Exempt up to RBI. Mahalakshmi is saying no. Aggregate turnover concept is saying Navneet Maurya. Not aggregate turnover, something else we have to see. If you have remembered, in case of gross salary, yes. No, not gross salary, actually, gross GTI. The gross total income we have to see. So if your gross total income does not exceed, Chaitra, 2 lakh rupees is the old limit. Now the new limit is 8 lakh rupees. Okay. So if your gross total income does not exceed 8 lakh rupees, without including this, then this 80,000 would be exempted. And if your GTI is exceeding 8 lakh rupees without including this point, then that is going to be taxed. This 80,000 is going to be taxed depending upon your GTI value. So now we have to see our GTI. So whatever perquisite we have considered, if I'll show you on a separate sheet. The basic salary was 5,40,000. Then DA is 120. And bonus was 45,000. Then employer contribution exceeding 12%. Okay, Nagaraja has calculated. Nagaraja is saying GTI exceeded 8 lakh. He's saying GTI is 8,11,650. Acha, I will see to it. So employer contribution is 4,9680. Then car perquisite was 4,500. Then rent-free house taxability was 5,6,970. And then now we have to see the travel treatment. Medical stay expenditure exempted. And for the purpose of taxability of this travel, we have to find out the value. And the value would be, total of this would be 540, 120, 45,000, 49680, 4,500, and 56970. So that is coming 816,150. So now tell me, do I need to tax that expenditure of 80,000 or not? I have solved question in front of you. So the provision says if your gross total income exceeding 8 lakh rupees, then this travel expenditure is going to be taxed. So I have solved the question in front of you. I have explained you the provision also that if your GTI exceeding 8 lakh, then it is going to be taxed. So now it's up to you to tell me, do we need to tax it or not? So Navneet is saying yes, tax. Dia is saying taxable. Mrs. Chaitra is saying taxable, and Navneet also saying taxable. Payasala is saying taxable. Nagaraja is also saying taxable. And the correct answer is Aditya also saying taxable, non-taxable. The correct answer is these are not taxable because they were saying GTI. You did not deduct standard deduction of salary. They are not saying gross salary. They are saying GTI. How we calculate GTI? You have to deduct the standard deduction. After that, this value would be 766,150. No other income in the question. That would be your GTI. It is less than 8 lakh rupees. So this 80,000 will remain exempt. Can you see this silly mistakes what you are doing? It can make your answer wrong. I am again and again I was saying GTI 8 lakh, GTI 8 lakh, and you are giving answer on the basis of this. You are not deducting this. This is not GTI, student. GTI would be this. After deduction, after all other heads of income, etc., etc. You cannot overlook these small things. I am telling you. In examination, it does hurt when you solve a question wrongly, even when you know the provision. Understand? So please be very careful about small things. It happens in excitement when we see, now, okay, it's 816,150. Let's solve it. No, there would be something else. So please apply the complete provision. As I always say in basic concept chapter, I always say whenever you are going to calculate the tax, please follow this rule. Tax minus rebate plus surcharge plus cess. So always write it down, tax calculation like this. So even if there is rebate is applicable, you will not forget about it, because when you will write it, if it is not applicable, write it down, not applicable. But if you will write it by yourself, so automatically rebate provision, you will recall, okay, might be rebate applicable or not. So if surcharge is applicable, and if you write it over here, you'll automatically recall about it, okay, surcharge is going to be applicable or not. In the same way, just understand the provision. When we say GTI need to be checked, then you cannot stop at gross salary. So it can cost you a lot. Okay. So that was RTP question. Very interesting question for multiple reasons. So these kind of questions make your practice or make you strong. So this is we have done. Now we are on our case scenario basis. Let me see how much time left. Okay, not much. Okay, so we can take this question, question number 1 from case scenario. Mr. Rajesh Sharma, age 54 years, an Indian citizen, is working as assistant manager in ABC Limited. He's getting salary of 58,000 per month. He used to travel frequently out of India for his office work. He left India from Delhi airport on 5th of October and returned to India on 2nd April. So I have calculated he will be considered as resident in India. The first question was he's a resident or not. So the option A is correct, resident, but because other information not given, how many days he was in India in preceding year, so we cannot comment whether he's an ordinary resident or not ordinary resident. So this is none of our salary part. The second question what they asked was, what are his taxable perquisite for assessment year 26-27? So we are calculating his taxable perquisite from the information given. Again, they have said that the option to shift out of the default tax regime. So we have to calculate the perquisite under optional tax regime. Now only perk need to be touched. Only perquisite calculation need to be done. So D&S allowance is not a perquisite, bonus is not a perquisite, medical allowance not a perquisite. This is a perquisite. So reimbursement with the medical bill of his mother amounting to rupees 15,000. So this is going to be taxed. 15,000 taxable. He was also transferred a laptop by company for rupees 15,000 on 31st December 25. The laptop was acquired by the company on 1st October 2022 for rupees 1 lakh. Company was charging depreciation at so and so, assuming life of laptop is 3 years. How does it matter? So laptop taxability, because it has been transferred to the employee. So we have to see how many year has been lapsed. So laptop has been purchased by the company on 1st October 22 and on December 25 it has been transferred. So there are 3 complete year. And in case of laptop, the rate is 50% for the purpose of calculation of perquisite. So it was 1 lakh. For 1 year debt would be 50,000. So the remaining 50,000, second year debt would be 25,000. And third year debt would be 12,500. So the value would be after 3 years would be 12,500. So 12,500 value laptop he has purchased for 15,000. So there is no perk because he has paid extra. There is no benefit from employer. So technically there is no perquisite because he has paid extra for the value of laptop. Okay. Next is he was also reimbursed by the salary of servant 4,000 per month. So point number F, 48,000. Professional tax paid by employer 2,400. So this is 2,400 taxability. Then again the share point, 250 rupees paid for 350 rupees share, 100. That means taxable value 40,000. So all this is 105,400. So the taxable perquisite value is 1,05,400. So the option number C would be the correct answer. Now in this question again they are asking calculate the salary income. So now we have to solve the other part also. The basic salary has been given in the question 58,000 per month. So basic salary is 6,96,000. DA has been given 10%. So it would be 69,600 as per terms of employment. Bonus has been given in this question 98,000. Medical allowance in this question has been given 60,000. You can see that D&S allowance 10%, bonus 98, medical. All other D, E, F, G, H point we have solved under this perquisite category. So the taxable value of perquisite category we have already calculated. That would be 105,400. Total is 1029000. Standard deduction 50,000. And remember, we are under optional tax regime. And professional tax paid 2,400. So that is also going to be allowed as a deduction. So after that, our salary would be, net salary would be 976600. So option number A would be my correct answer. Tax liability would be, of course, not our salary topic. Again, tax liability is not salary topic. So these questions are easy. The majority of difficult question was in the question earlier we have solved. You will see these questions are very, very simple in comparison to the question we have already solved, whether it's question number 2, whether it's question number 3, because all kind of cases we have discussed. If you read it, Hardik is appointed senior executive officer in Sky India Limited, so and so, 40% DA, unfurnished accommodation. There is no new point, but that does not mean that you are not going to try these questions. You have to try all case scenarios, all questions we have discussed, test your knowledge question and illustration from study material, and pass 2 or 3 years question paper also. If you will able to do these things, I can assure you, you would be able to solve majority part of your examination paper, and definitely you are going to get very good marks. Be very attentive in reading question paper, being very attentive to understand the information which is given in question, and please be very attentive when you solve that question. Do not do silly mistakes. Do not do that kind of mistakes what you have already solved at the time of your practice at home, etc. If you do that kind of mistakes, that is really going to hurt you in the examination. देखने में थोड़ा कॉम्प्लिकेटेड लग रहा है. किसको लग रहा है देखने में? नवनीत. कुछ कॉम्प्लिकेटेड नहीं. एवरीथिंग इज इजी. यू जस्ट नीड टू रीड सम बुक्स एंड यू कैन मेक योर फ्यूचर जैसा भी आप चाहते हो. इससे आसान काम कुछ नहीं है. Dia is saying professional tax paid by employer. First we have to add it, then we deduct from total salary up to 2,500 in case of old regime. Yes, you got it. Correct, Dia. Okay, student. Any other query, students? If you want to ask, you can ask. Deep is saying CA syllabus is very interesting. Yeah, it is interesting. Very interesting. If you think from the point of view of your future, by Navneet is saying 35,000, 3,500, 65,000. इसे solve कर दीजिए एक बार अभी. Okay, नवनीत जी solve कर देते हैं इसको. चलो. This is called range wise salary, and this topic we already solved, or you can say we have discussed in salary last day lecture. So when in any question this kind of salary has been given, like the question say, Mr. Hardik, age 45 years, appointed as senior executive officer in Sky Limited on 1st February 2025. So 1st February 25, the salary scale has been given this. 35,000 dash 3,500 dash 65,000. So when salary has been given in this range, that means at the time of appointment, your salary would be 35,000 per month. And exactly after 1 year, that means from 1st February 2026, exactly after 1 year, it would increase by 3,500 rupees per month. So on 1st February 25, your salary was 35,000 per month. And this range means after exactly 1 year, your salary is going to be increased by 3,500 rupees per month. So it was 35,000. So now from 1st February 26, it would become 38,500 rupees. And after 1 year again, that means from 1st February 27, 38,500 will increase by 3,500 again. So it would be 42,000. And after 1 year again, from 1st February 28, it will increase by 3,500. So it will increase until it reaches to 65,000. So after every year, it is going to be increased with this range of value which has been given in the middle. So 35,000 is from 1st February 25. So it will remain 35,000 per month from February 25 till January 26. From next February 26, it will be from 38,500. And from next February, it would become 42,000, so on. So on the basis of this range salary, I have to find out my basic salary, and which is previous year 25-26, and which means from 1st April 25 till 31st March 26. This salary I have to find out. So if you'll see, if you can tell me in April 25, how much be the salary due to this range? What would be the salary in April 2025? It's a mathematics question. This is nothing to do with income tax. The range means I've explained it to you. In detail, we have discussed the range question also in the salary last lecture. So of course, on 1st April, it would have been 35,000 per month. Because from 1st February 25, it was 35. So in 1st March also 25 and from April also 25. So from April till next month, January 26, that means for 10 months, it will remain 35,000. From February 26, it will become 38,500. So for February and March, for 2 months, we will take 38,500. For 10 months, we will take 35,000 into 10. So total would be total salary we have calculated for rent-free accommodation. So 35,000 into 10, 38,500 into 2. That would be 4,27,000. Clear, Mr. Nagaraja or Navneet, to whomsoever asked this question to me. This is mathematically, it would be 4,27,000. For 10 months, it would be 35,000 per month. And for 2 months, it would be 38,500. Clear हो गया? चलो. So next class would be on Monday. And in that class, we will discuss the provision for PGBP. Of course, a very, very important chapter for your examination. Generally, the compulsory question comes from that portion, majority part of that from PGBP. Gayatri saying, I appeared January 26 batch unsuccessful. Now for May 26, which lecture I need to watch again, or this revisionary lecture alone? Amendment, please clarify. Gayatri, no, these revision class would not be enough for you. You have to see the lectures, I guess, in faster mode you can go and see, or the amendment part you can see separately. Like in basic and residential status and basic concept, because rates has been changed, so there would be amendment. So I would recommend you to go through all the lectures in a fast track batches, something like that. Residential status do not have any change. So find out the amendments in which chapter they are. And if the amendments relates to any chapter, you need to watch the lectures of new classes. That is going to help you a lot. Like basic concept, rates has been changed. So tax calculation process has been changed. Residential status, there is no amendment. I believe in salary strength deduction has been changed. That is the amendment. In house property, there is no amendment. Then for capital gain, PGBP, other sources deduction, you have to go through once and you have to find out the amendments. But I recommend you have to go through all the lecture once in a faster batch. So it would really going to help you. Aditya saying, sir, amendment is mandatory to read in income tax for exam. Of course, yes, Aditya. It may apply 2026 exam. No, we are the lectures we have uploaded for assessment year 26-27, the last lectures, those are including all the amendments. So if anybody has given examination for January 26, they need to see the lectures for new assessment year. Okay, anyone? Any more queries, student? So I guess we will see each other on Monday with PGBP provision. All the best, everyone. So Manish, can we close the session? Done. Okay, thank you. Good night.